Hello, warriors. Hello, Face. Hello, viewers on investing.com. Welcome to our trading family. Good morning, Amit. Good morning, everyone. Doing okay? All right. Very good. We're always glad when you can benefit from our ideas. You want to say thank you to us? You subscribe to our community. Okay, Anonymous? So, yesterday, um, and I'm not going to try and, this is not a victory lap. So I think it's instructive. So yesterday I felt the Fed would disappoint with the quarter. And the disappointment wasn't that they just won a quarter, but Jay Powell didn't sound that dovish about more rate cuts down the line. But, that's, anyone could guess, right? And it's not really actionable either. But what I've been saying for a week or so now is that the whole world was looking to short S&Ps at 30, 40, 30, 50. I mean, try and find someone who wasn't looking for 30, 40, 30, 50. So this is what's instructive, and you may want to write it down, and perhaps it'll give you a bias and something to look for the next time something like this, you have a unanimous opinion about a technical setup, is that when everyone is looking for the same thing or a number, it either never achieves it, or when it gets to it, it's not significant. Okay, so it was just too much of a layup to sit here and wait for the Fed to take the market up to that level. We failed. I think it's significant, in my opinion, that this break is just the beginning of a correction. I know a lot of people are going to say the jury's out, and of course, I could be wrong. The first inkling that I'd be wrong on S&Ps would be closing back above yesterday's reaction afterwards, after the spike. That's up around last week's lows, where I was short last week and did not expect a rally to new highs. Thought we'd just get a recovery. So it was all delayed to the Fed, and we had another marginal new high, couldn't make a new high. Anyway, this looks to me like we're flagging. I'd call this pretty directional. I mean, you're talking about a couple of candles that it got to in a hurry, beeline. So we're trying to recover here. Looks like, maybe some type of flag, but I don't think this is a low. Bigger picture, what's interesting is I look for 2-week reversals, and we're right on. So a 2-week reversal would be this week closing below where we closed 2 weeks ago. And that off number, we're right there. Is that it? We haven't achieved it. 29. We got there, but it's 29.72. So, we're still above the 2-week reversal. But here's a couple of speed lines that I think are possible now. Let me break it down. Okay, 23% back of the whole rally comes in around 28.60. And then you have all kinds of fib levels along the way. One of our guests last week was talking about 61.8 back. I think he was talking 26.40. Maybe he's measuring his fibs differently. That was Peter Goodburn. So I really think it's possible that we're going to work. It's going to work this way. And really, what's interesting is tomorrow's the NFP, right? So the NFP, Jay Powell better hope for a decent number, because if it's a weak jobs number, people are going to say he's behind the curve, okay? That he should have been more aggressive about easing. So, he'll look smart if we have a strong number. Either way, the technical damage is being done in the S&Ps. I don't want to take up too much time because Greg is going to be here, but I have a few comments. Everyone get that back next time you see everyone on Twitter and, what's that one? LinkedIn, posting their stuff and looking for one thing to be skeptical. That's the main lesson in this. Give me a why if you get it. So you saw a real live example of it. Because when I retire on a tropical island, you'll go, hey, I remember Dale used to say that. Okay, so these are things that we teach you here, everyone in here, Blake, Steve. It's not just analysis. There are a lot of real good teachings that happen in here. So that's a look in the S&P. So Paul needs a strong number Friday. Otherwise, there could be even more of a panic if we get a weak number and Paul didn't sound as dovish. Although, he could always just say something else like in 5 minutes. And also, if we get this correction in the stock market, our president now has cover because he was hammering the Fed, wanted it to be aggressive, a half, stop QT right away. So if I'm right about a correction in the market, correcting this recovery from last year, our president has someone to blame, right? Because he was telling the Fed they're too tight, too long, not aggressive enough and easing. So this could be a political football as well as a financial football. A couple other things I want to talk about. My hat's off to Paulie Franco. So yesterday, Paul came in and he was talking about the yen. And I know I would bet my last dollar on it that Paulie, I think it was on his bias chart, he had big resistance at 920 or 930. If you're around, Paulie could chime in. But what great numbers he supplies, isn't that? So hats off to Paulie on a great call. If you got short in his areas, you already have 30, 40 pips. You could take half and go to BE. Nice call, Paulie. And okay, here's something I missed. So I also wanted to fade the silver because I said gold silver ratio looks like it could begin to correct, and that's definitely happening. But I didn't get the setup. Okay, I was talking about looking for a third drive. So here's one I missed because I didn't get my setup. I mean, sometimes they're not always threes. Sometimes two is enough. So I missed plenty of these. Anyway, the message is pretty clear. And yesterday I said, why can't we pull back to 1560, 1570 and just consider that just a pullback in a bull market? And then I took a look at the weekly and, I did fibs from here to here. And I don't know if it's correct or not. It's just something I did. But, we failed right here at the 78.6 retrace of this decline, which was, I think, 1730. So call it 350. And this is not such a great week. If we close down here in silver, we have a pretty good reversal week. And I know everyone's bullish and talking about much higher numbers, but just be open to the fact that if we get back under 1560, something else is happening. And if that happens, why can't we have this from here? And that would give us $13 silver towards the end of the year. Yeah. Okay. Yeah, 1560. Boy, you have a better memory than me. You remember everyone's trades. Why don't you get a handle for coming in here if you're going to be anonymous? We don't like anonymous people in here. Okay. You show your face, register a name if you want to interact so we can get to know you. All right. If you have to hide, right? If you have to hide, you're not part of a community. Okay. Anyway, the guys will probably get mad at me. Anyway, so that's silver. Gold. Looks like we're going to get Greg is going to be with us. So he'll probably talk about his scenario in the gold. I know he was looking for a pullback to 1380 or so, and Blake was too. And then I thought we'd get a third drive there, and we didn't. And anyway, looks like we're headed towards support in gold, and we'll see if we could get. I know a lot of people are going to be buying this break. So, Blake, I think I hear you.
Yeah.
Have I babbled enough?
You know, you can never babble too much. I'm tired.
Okay. All right.
I play.
All right. You
No, go
played
ahead,
what?
man.
Go ahead. What
No, I said I played tennis last night,
Oh
and
my God! And
it's
100 degrees at night.
it was is hot and muggy because we have monsoon season, so
I
it was
know.
probably like 95, but pretty humid, and man, it's just a butt kicker. I went to bed, and I just went comatose.
Oh,
Like,
you didn't sleep good the night before, so that was a
no,
break.
my body needed that extra like workout, and then
Yeah.
I was out.
Yeah, you know what, Blake? Yeah, is that something really important for people that are traders? And I noticed, I've talked about my lousy diet, and I know you have that background about good food and exercise. And don't you think that being a trader is like being an athlete? Although you're not using your body, but you have to train physically to put up with the stress and duress of trading.
100%. It definitely is. It's you're a performance athlete as a trader, um, and it's bottom line, you got to treat yourself as such. But physically, is actually being physical is so important, because when you're sitting in front of your desk,
Yeah.
you'll just wither and die. No, I'm not exaggerating. I mean, I sit here in front of my desk or in front of my computer probably at least 12 hours a day, sometimes a little more.
Yeah.
And it's so vitally important for me to make sure I get some sort of physical activity in every day. And frankly, I don't always do it. It's always on my mind, but sometimes I just
It helps you
caught up.
mentally.
Yeah, it does. Just that release. It's
Yeah.
like, one of the things that I'm going to have installed in one of my garage bays. I've got an extra garage bay that's I'm installing a bag in there
Oh,
just to
cool.
just go
Heavy
out and
bag.
hit. Yeah, just to go out and hit, and
Yeah.
because it's just that release, that physical
Yeah.
release.
So I mean, it's there. You go. Blake just gave you a cure for revenge trading. So
Yeah,
anytime you feel like that, you just go into the garage and you kick the bag around.
there you
Will
go.
you
All right.
stick?
So
Will you
uh,
stick Steve's face on it?
yeah, you have a good
I
target.
might put Steve's face on that. Yes.
So
Nah, Steve says I'm going to put
yeah,
Peter
he's not
Schiff,
here. We
your
can't.
hero.
It's not as much fun to attack Steve when he's not here.
Oh no, it's not. You're right. You're right. But if I put his face on the bag, then
Yeah.
he's always there, and I can beat him up. But no, it's going to have Peter Schiff's picture on it.
Oh, that's his idol.
Yeah, it's a Peter Schiff bag. Anyway,
Steve loves Peter.
hey, a couple things. We
ahead, bro.
talking about Polly, and so last night the dollar yen was spiking into this 618 retracement above the resistance zone.
Yeah.
I shorted some dollar yen up here. My average was at 18, 109.18. Polly picked it off at 28.
Nice.
28.
I knew he would.
He picked it off right here, got short. I don't know how long he stayed short. I closed mine this morning when I got up at 1895 right here. And the reason why is because of this. You can see all of this support, these spike highs through here. I was like, okay, we dipped below 109. I'm going to go ahead and cover it up. But I obviously was a little early. And like I said, I don't know if Paulie's still short, but man, he picked that off last night. And Timo was in the chat room, Nitish was in the chat room, and I basically just put my stops right above the highs at 31 or 32, excuse me. And I got out this morning. It was nice. Yeah, it was a nice trade. But I think he did pretty well with that.
What a team.
Yeah. So it was good. I just bought the euro dollar. Now, you guys are probably going, whoa, wait a second.
I see why.
You bought the euro dollar. I tweeted about it last night. I bought it at 27. Now, I literally picked it off the lows. I cherry picked. Well, I at least cherry picked it off the lows that stand right now. I mean, there's nothing there's nothing right now saying that the euro can't drop into new lows, which it quite possibly could. So, but I did pick it up off of these levels. And if you're asking why, I'm going to tell you. First of all, we have this lower trend line that we're coming into that came into play. 127% extension. Oversold on daily RSI. 4-hour RSI is ridiculously oversold and divergent. And then also the daily sentiment index and the dollar index is at 94. So, and then if you look at the dollar index itself, we are nearing that 127% extension. I'm just a little, if I was long the dollar, I would be a little nervous. Matter of fact, I took the remainder of my dollar peso off. I actually closed out the pattern and planned ForexAnalytix just because I'm worried about the dollar. People got, extremely bullish, the dollar, probably extremely long after yesterday. And I think you got to be a little careful down here. Now, I will tell you guys that my long euro dollar is 1/3 my normal position size. Remember, all week we've been talking about the bias chart. And here's the bias chart. Just remember, we've been doing the bias chart together, doing the support and resistance levels, putting in the biases. And like for the euro dollar today, I'd probably put in a bearish bias while it's below 111. You got to tag it as a bearish bias being below 111. But I'm going to tell you, just because, and I explained this to you guys yesterday, you can go back and listen to it if you don't remember. Even if I have a bearish bias on something or a bullish bias, doesn't mean I won't trade counter trend. If I do, which I am right now, as I just explained to you guys, I just bought the euro dollar. I'm not buying it in size. I'm actually 1/3 my normal trade size right now. 1/3. So let's put that into like perspective. Like, let's say I normally trade 2 million euro dollar at a time, which is not too far off of my normal size. But let's just say I'm trading 2 million euro dollar normally. Well, that means I'm buying less than a euro million dollar if I'm trading 1/3 size, meaning I'm not real confident going counter trend, but I know we're at such key technical levels that I'd like to establish some little position just in case we get like a push back above the 111.50. I can move my stop to break even, and then hell, maybe I get lucky. By the end of the day, we close back above 111, and everybody goes, "Oh my God, that was a false breakout in the dollar." And then next thing you know, the euro's trading at 112. By the end of the week after a week non-farm payroll. I don't know. I'm just, I'm putting in myself in that position to be there just in case. And that's how I'm approaching it. But anyway, I want to explain that to you real quick. Stelios is here, and I'm gonna ask for his comments here in just 1 second. The cable is also trading at some pretty key support. We're at channel support. Notice how we keep hitting channel support. Overnight, we hit channel support again. Bank of England just met. I was just listening to Carney and his wonderful press conference. Man, I tell you what, I love that guy. Yeah, Brexit is unwelcome. Really?
Yeah, that's why they voted for it.
That's why everybody voted for it, because it's unwelcome. No, he should have said, from an economic standpoint, a hard Brexit without any assurances is going to be unwelcome. If he would have said that, he would have been such a dumbass. But excuse my language. It just, it's like, dude, everybody, the majority voted for Brexit. It is welcome, you jerk off. Anyway, but yeah, I won't even go into that. But I hope he's our next Fed president. I beat the hell out of him over here. And you want to see the dollar weaken? Just go ahead and name Carney or replace Powell with Carney, and then we're gonna have a real weak dollar. Okay. But I listen. Before I go off on a tangent, one of the other things that I want to, Coach, are you here? Really quick.
Yeah, buddy.
Okay, so we've been talking about gold and silver, and you were mentioning it. Now, gold, we never got that 3 drive.
Yeah, silver either.
No, we didn't. But you notice where gold's at, right?
Yeah,
it's near channel support here, and it's near a 38% retracement. So, think about if the dollar is if the dollar starts to weaken from here, based on what we've been showing you,
we could still get the third drive. It could hold here and blow one more time
to 14, right to 1450, 1460 to the top of this channel.
And I like gold more than silver now, because if you look at the gold silver ratio, the gold silver ratio is starting to come back, which means gold will outperform silver. So that's a preferred long right now.
But let's I mean, here's silver, and look at what's happening. Yeah. So silver is, in my opinion,
it's still a buy.
Oh yeah, we come down to 1580. I'm buying it.
How about closes under?
Closes under, I might be a little. If it closes below like this 50% retracement right here, and here, let me just adjust this. It closes below 1575, then I'd really start to worry about longs, I think.
Okay.
But yeah, I mean, it's dipping into the natural buy zone here. So
yeah, I said that there were going to be a lot of buyers. I thought maybe deeper. I think Greg was looking for about the 1385 level on his analysis.
Whoa! 1385
in gold.
Oh, yeah. 13, anywhere between 1370, 1380. I was thinking you're talking silver, like down here.
Only me. I'm looking for 13 by year end if this breakout fails.
Wow. If it fails, and
look at the weekly,
we are definitely going down there. Not
a good week.
I wouldn't be too worried about it. I honestly wouldn't be too worried about it. I think you gotta think about where the dollar's at too, and see what happens with the dollar. I think the dollar is going to be in the driver's seat here. But let's bring in Stelios. What's up, man?
He's a silver baron.
What's up, vacation boy?
Hey.
Silver baron.
Hello, how are you doing?
Are you still on vacation, or are you home?
I am still on vacation.
You are living the dream.
Then your wife must not be very happy with you being here right now. But thanks for tell your wife thank you for being here and or allowing you to be here. Let's hear your take on the Fed yesterday.
Yes. Okay. So I think you mentioned a little bit the Fed cut 25, and it wasn't really the cut itself, although there was a chance of a 50 priced in. It was the way Jay Powell talked, and he basically called it a midterm policy adjustment, which is not what the market was looking for originally.
Right.
The market was looking probably for a start of a proper cutting cycle. Now, having said that, so this is why the dollar has been on a tear since yesterday. But having said that, we have to remember Powell always did his best to look like, or to show people that the Fed is independent. We all know Trump has been talking a lot about the Fed cutting, and he was disappointed yesterday, etc. Remember the U-turn that the Fed made after the end of last year. Before that, the Powell was quite hawkish, and then suddenly, within the period of a few weeks, things changed. My opinion is that he still wants to show that, look, the Fed is independent. We do what we think is right. But I want to wait to see what's going to happen in the next few months, because the market is pricing now 2 more cuts, 2 more and a little bit, let's call it 2. And it's something until the end of next year, that is. And it's something that can very, very easily be, they can easily cut more than that if conditions warrant.
Yeah, if conditions worsen, right? So like let's say China U.S. no deal. Yeah. Let's say it just completely gets taken off the table. So what then?
Yes, exactly. And he's in a very difficult situation, because some parts of the U.S. economy, we've said this before, they're doing well. Unemployment is at lows. Housing is still relatively okay. Stock markets, well, let's not talk about stock markets. They are near all-time highs. The problem is that a lot of the leading indicators have turned. Chicago PMI we saw yesterday was a huge miss. So we have to put everything in perspective and try to think how the Fed thinks. And the Fed can see that the economy is not collapsing, and far from it, but the risks are quite large. And that's what they keep telling us. They keep telling us that the economy is doing okay, but the risks are big. So if there's any kind of meltdown in US-China negotiations, then I reckon the next cut is going to be a 50. So they might, get to where the market's pricing within one meeting. So we have to be patient. We have to see what's going to happen. We've seen this kind of talk from Powell before, and he did the U-turn afterwards. So I want to wait.
They'll have a kumbaya if the S&Ps are back at 2,500. Something I read, I just want to share with you guys why Europe is, their bourses, DAX wasn't making a new high. Most Europeans, I think maybe the FTSE did, is they say that 33% of Euro GDP is export related compared to 11% here in the US. So the US starts a policy that hurts Europe more. It's hurting us too, but hurting Europe more because they're more export dependent.
Yep, that makes sense.
That does make sense.
Yeah.
Well,
so,
and what happens if the US turns on Europe, which is already, the tide is already turning, right?
Yeah.
Right. Yeah. I mean, that's what I think.
So that's a domino. Europe, then Asia, and we're the last man standing. But it used to be we would sneeze and the world would catch pneumonia. This time it might be the world has pneumonia and we get a very serious cold.
Yeah, it could definitely be the case. So, well, Stelios, I know it's good to hear your analysis and your thought process with the Fed, and that was really the key takeaway is look, it was a one and done, quarter basis point one and done, and the market said, holy crap, he's not as dove. And it's not necessarily one and done. I don't think the market's pricing in one and done. Hold on, let me pull up. Just give me 1 second.
Fed fund futures are pricing 2 and a bit by year end of next year. So let's see.
So for September, we're looking at we're still looking at.
So it looks like it's 50-50, right?
It's a bit more. I mean, we're looking at still a half a basis cut, potential.
Well, if the S&P is correct, this advance, it's going to happen, in my opinion.
Yeah. So let's see if that continues to stick or not. And the fact of the matter is that like you pointed out, if things start to worsen, we could get that that another cut. And then what you see with the dollar strengthened, but this is my biggest fear with the dollar is that, we had this, breakout because, and if you guys don't recall, and I'm going to go back to my week ahead video that I explained to you all that the risk was that the dollar was going to break out. And I've been playing it to the short side a lot for the last several months, but the fact that we were barely even pulling back was risking a breakout. But now that we've broken out and we've really squeezed probably a lot of shorts, the risk is, how about if we end up posting a false breakout? And how about if tomorrow's jobs report is a little weaker and the dollar closes the week back below 98.30? That's gonna wrong side a lot of traders, in my opinion. And so I think you've got to be a little careful with the dollar here. Yes, I am not necessarily trying to talk my book because I did short some dollars this morning, but it's so small, it's not even really worth, it's not like I'm aggressively short the dollar thinking, this is it, it's turning lower forever and ever. I'm just basically playing a little counter trend, and I can pretty much tell you I'm going to be out of the position probably within the next hour or two. But I'm just laying out the idea that maybe perhaps this is ends up being a false breakout, especially tomorrow if the jobs reports end up being a little weak. But Stelios, I want to say thank you so much for being here this morning and taking the time out of your vacation to be here and
it's
be
my
with
pleasure.
us.
And Blake, I really agree with you. I think going forward, the way things have gone in the last couple of days with the dollar, negative news are going to move the dollar much more than positive news. That's my take on it.
And by the way, we have data coming out. Hold on. We have unemployment claims. It shouldn't really move the market too much. Just letting you guys know that They rose 8,000 to 8,215. So it's a little bit higher than expectations, but not a lot. Anyway, but that was that the market had to prepare for that a little bit. All right, well, Stelios, go back to the beach. Enjoy. Are you going to be here tomorrow? Are you traveling back tomorrow, or what's happening?
No. I'm going to be here for another week. So, but I'll be here on the webinar every day. So.
Oh, you are. Wow.
Yep.
All right.
I'm gonna need to buy something nice to my wife afterwards.
Thank your wife for bring her back a handful of sand and say, look, I brought you sand.
Yeah.
She'll go, thanks for the sand, jerk. All right. But no, enjoy the time with your family. Really appreciate it. We're going to bring Grega here in just a couple of minutes. Coach, if you can take a look and see if he is around, that would be great. But in the meantime, what I'm going to do is I'm going to take you guys through a couple more charts that I think are important. So as Stelios were talking, I was pointing out, I was just kind of drawing this with the S&P. I think you got to watch the S&Ps here. We did test the really very critical 2970 level. Yes, I know we dipped below it, but the fact of the matter is we dipped below it, probably took out some stops, and we bounced right back above. All right. While we're above 2,700 on a closing basis, so listen to what I'm saying. As long as we're above 2,700, or I'm sorry, 2,970 on a closing basis, 2,970, the market's still bullish. Okay. As long as we are above 2,970 on a closing basis, but we close below 2,970, you have to start being very careful with long risk trades. Okay. And
what do you think happens, Blake, if we get a weak number tomorrow on the NFP?
I don't know. I mean, you're probably asking regarding S&Ps versus the jobs report. I don't know. And you know what? It's okay not to know. I've come to that realization a long time ago. A lot of people, and this is the funny thing about financial Twitter, we call it FinTwit, where everybody loves to be right and always be able to I've got answers for everything. Well, you know what? I've been doing this for over almost 25 years now, and I don't have answers for everything, nor do I know everything, nor do I even pretend to know everything. Look, I don't know what's going to happen tomorrow, and if the jobs report comes in weak, let's just say for argument's sake it does come in weak, I don't know if the stock market is going to respond by going, ooh, that's bullish because the Fed's going to continue to keep rates down, and then it's going to support stocks. Or people might look at the market and go, wait a second, maybe there is a very big turn coming in not only the US economy but the global economy, and that's actually, we should start selling some stocks up here at these lofty levels. I don't know, but I think there is a risk that if we do have a weaker number, that the stock market could start to peel off some of these
because they'll think Powell is behind the curve.
Yeah, and don't forget, guys, this is August. Seasonally, these are not good times for equities. And one of the I was just reading.
When, Blake? October from here?
Yeah, I think it's August, September tends to be a little weaker as far as seasonals go. I was reading a piece from either Citigroup or Barclays, I can't remember exactly who. I was reading a research piece about talking about the outperformance of the dollar against commodity currencies and emerging market currencies in the month of August, due to seasonally, this is a tougher time for equities this time of year. So, fact of the matter is, if stocks do come down because people go, all right, well, here we are at the end of summer, and we're going to take some of these profits off the table. If we do start, seeing some selling, the question is, what's going to be the response in equities? And I'll tell you guys, I'm doing a presentation on August 10th and 11th. I think I'm doing mine the 10th, but I got to double check. But anyway, you should register for it. I tweeted about it yesterday. I'll be tweeting about it. It's called Trader Fest. It's Pepperstone Securities and Pepperstone Securities and our sponsors here, Forest Park FX, are putting together this roundtable. Boris Schlossberg from BK Asset Management, which you guys see him on CNBC all the time. Him and I have been chatting a lot over the last couple weeks regarding this. He's going to be one of the hosts there, and I'll be doing it, and I have a presentation. I don't want to give it away, but really the presentation is what do we do with the FX market should we see weakness in the S&P or in the stock market at these levels, from these levels. Is it the standard buy yen, buy dollar correlation, or is there something different? And frankly, I think there are other things to consider, so I don't want to give it all away, but I will tell you this, that if we drop below this 2970 level and stocks do start to see some selling, I don't think we should expect the same response that we've always gotten in the markets. And so I just some things to think about, some things to think about as we move forward. And you'll hear me talk about them, especially over the next week. If we do start breaking down a little bit, you're going to hear me talk a little bit more, but not give away the whole gambit from the presentation, because I think you guys are going to really enjoy this presentation that I'm putting together for you. But anyway, it is free to attend, and you guys can sign up for that link. Just look for what I tweet and on Twitter, and then sign up for it there. Plus, if you're a ForexAnalytix subscriber, you will get an email regarding that event here in the next couple of days. A couple of other things to talk about, just because of the last couple of days that we've been together here. As you and I at home, we've been going through the support and resistance levels on the bias chart, and I hope you guys have enjoyed the time that we've had this week putting together all the support and resistance levels on the bias chart. Obviously today I'm not going to have the same I'm not going to be able to do it for you, because we have Grega here, and Grega is going to be able to go over his Elliott wave counts and some of the things that he's been seeing in the FX market, which I'm excited for you guys that you get to hear Grega. But just keep in mind that if you are a ForexAnalytix subscriber, you get these support and resistance levels here, and I've been adjusting them all this morning, because these are manually adjusted. So if you want to take a picture of ForexAnalytix as you see it right now, go ahead. But those are the levels that I see based on my analysis. But the great thing about being part of ForexAnalytix is you get to see that. Now let's talk about some of these other pairs. So the US dollar Canadian, this is a pretty big move yesterday, because remember yesterday, 24 hours ago, Canadian GDP was stronger, right? Do you remember that, Dale? It was so long ago, right?
Yeah.
Remember Canadian GDP, and 24 hours ago, we pushed below the support, and I said, you guys got to be really careful that if the market is disappointed with the Fed later today, this is yesterday's conversation, I said, if the Fed's really, if everybody's disappointed in the Fed and the dollar starts to rip, you're going to get everybody caught off guard from the strong Canadian GDP yesterday. And what happened? Everybody got caught off guard. As soon as we broke this 3160, I actually scalped it. I didn't even tell people, because I was so busy scalping around the market yesterday. I was mostly focused on other stuff, but I actually ended up taking a small piece from here to the 80s. I didn't think we were going to break out above those highs. We actually broke out, came down, reset, and here we are right now. But that was a big risk. and watch that Canadian, because if we continue to see a little bit of risk off here, we could see the Canadian lift a little. Now it sounds like Grega is here, so let's go ahead and find him in the participants, because he is in attendees, I think. So do you see him? I'm gonna have to look for him. I'm looking. Do you see him?
I was looking.
Do you have any questions? Oh, here he is.
Okay.
Let me just double check, Gregor. All right, he's coming over as a panelist, and can he?
I'll unmute him.
Oh, okay. Hey, Grega.
He is unmuted.
Hey, what's up?
Hey, what's happening, man?
How is summer going?
Dude, I don't know. You tell us. You've been on vacation.
Yeah.
I have been too.
All summer, huh?
Yeah, it actually has felt like a little longer summer than normal for me. Yeah. I don't know. I don't know about you, but it's good to hear your voice, because I know you've been out traveling around. I know you've popped in every once in a while. It's great to have you here. And I think everybody that's listening in right now wants to hear what what do you call him, Dale? The Wizard of Waves?
You got it.
The Wizard of Waves. We want to hear what the Wizard of Waves has to say about yesterday's price action.
I'm not really sure if I'm good Wizard of Waves of this summer trading. This dollar is really so, markets are so uncorrelated that I just don't remember when it was the last time I have seen such a different pictures across different currency pairs.
It's definitely a mixed market, and it's not easy. And for anybody that's out there saying, "Oh man, this is easy," it's like, it's not. It really isn't. And look, I trade for a firm, and all of us at the firm, we're just like, we're just busy trying to keep our heads above water and make a little bit of money, because volatility has been so low. And with volatility low, and if you look at like the euro implied longer term volatility, we're still, obviously it increased a little bit, but it's still very, very low historically. So
yeah, and Grega, even wizards don't perform their magic all the time. They use it just like we use capital when we're compelled to take risk. So you can't not be the Wizard of Waves because things aren't correlating right now.
Yeah,
tough. Live with it, man.
I have to come out with something, right?
Right. So hey, I'm gonna stay here, but what I'm going to do is I'm going to stop sharing and let you grab the charts, because I'm interested to see what your counts are on the dollar, because I'm a little worried about the dollar strength, and I don't know if it's going to last. So seeing what you are seeing with the dollar, hopefully it can shed some light on maybe my ideas. And that's, by the way, just real quick, that's one of the beauties of using ForexAnalytix, is being able to, and I'm not going to give away all of Grega's analysis, but if you see EW, that's Elliott wave, then you got harmonic, then you got basic technical. Grega updates these Elliott wave columns on all of these instruments every day. And so being able to see Grega's view combined with like maybe my view or somebody else from the team, and see if it's matching up with what you're seeing and what you're feeling. That's the beauty of ForexAnalytix, is being able to combine multiple analysis at once, and come up with a good trade idea on your own. So anyway, Grega, let's see what you got to say. I'm going to stop sharing my screen, and you can go ahead and grab it.
Yeah, sure.
I'll let you know when I can see your screen. I can see it.
Okay, good. So about that current push down on the dollar,
yes.
on the euro dollar, it looks like a breakout if we would consider, let me just hide this. If we would consider that we are somehow trying to move out of these 1 year consolidations, right? But still, my main concern is this lower trend line. Okay, now even if you are not Elliott wave guy, if you're just focused on old school technical analysis, you should spot this wedge pattern. And always when market is in a downtrend and you see this wedge pattern testing with the price testing the lower side of this shape, then obviously it's still not a breakout that maybe someone see on the euro dollar to the downside. So I would be very careful here. Okay, the idea is that this could be actually a leading diagonal forming for a wave A. Okay, still the first leg of a much bigger euro dollar weakness that I'm expecting. Now that's one view. Okay, the next view on the right is actually the idea that maybe we are already in this third leg of decline. But what is the power of both analysis is actually that this leg, right, and this leg on the right, both should unfold in 5 waves, because in leading diagonal, each leg should be made by 5 waves. So I'm expecting a 5-wave drop here in a wave 5, even if this is still final part of this wave A, or you would expect 5 waves down if you think that we are going much, much lower, because obviously you would be looking for an impulse. So with that being said, I don't want to bother on the long-term picture where the euro dollar is headed. I will just focus on the shorter term swings, because I think there is the price action that has much more clear views. So if we go to the 4-hour chart and focus just on a decline that is now happening away from June highs, I would be looking at the 4-hour chart. Okay. So on the 4-hour chart, what do we need? As we said, if we are in a downtrend, either for a wave 5 or much higher degree wave C, that will be an impulse, you need 5 waves down. So on the 4-hour chart, this is wave 1. Okay, this has been a wave 2 bounce. Then we have seen a collapse in 5 waves, and looks like that we are now even making an extension lower into wave 5 of 3. So the idea is that market will stay bearish here after a bounce, and I think that this bounce could actually be opportunity to look on the short side, because as I said, after all, euro dollar is in downtrend, no doubt. Probably that's the strongest breakdown that we have seen in the last 10 months or so. And even if I have some kind of a bullish, where it is, some kind of a bullish wave count here, let's say for September, I think there's still room to make money on the downside to catch some weakness this month. So I'm thinking about and tracking this count very closely, as I think that market could easily go for another down for another 200 pips or so. But of course, I always want to wait on a pullback. I don't want to jump into the trade here. I will be watching this wave 4 developments, but after we maybe touch these fib levels down there to complete this wave 3 cycle. Okay, so the idea is trend is down. We have 2 different wave counts, but both suggest that current fall should be in 5 waves.
So let me ask you this: if the euro, like let's say the euro actually bottoms here, let's just call it 110, roughly at that trend line, how would you frame that if it did? Like, let's say it stopped at that trend line that you were like, hey, we got to pay attention to it, and we stop here at 110.
And we go higher. Okay.
And we go higher.
I mean, if we would go higher back above 1191, then I would probably call end of a wave 5 and would already focus on a wave B. But why this is important is because we know that once correction will start unfolding of a wave 4, then obviously it should not step into the territory of this wave 1 or wave 2 if you want.
Right? Got it. Okay. All right. All right.
In such case, as I said, I would be looking for this recovery to come back in play, because clearly it would be just a failure breakdown. And obviously, either that 12-month range will continue, or we will just step into a higher degree, more sharper correction here for a wave B.
Got it. And and the fact of the matter is it has to go really a lot long distance from where we're currently at to 111.80, wherever you said it was, 81 or whatever it was. We have a long way to go for it to even start to show signs of a real big reversal.
Yes, but you know what? We have tomorrow. We have
right
farm payrolls report. So, I mean, tomorrow will be a very important day.
I agree.
Especially, I mean, I didn't take any trade this week because of that, and also I will not take it today because markets maybe will now slow down and wait on non-farm payrolls report. And what is important for me is just to make sure that this breakdown on euro dollar or break higher on dollar is really here for real. Okay, that will stay here. And if dollar will stay strong after the non-farm payrolls report, then probably we will have enough of evidences that this is a real deal and not just a temporary push higher on dollar index.
Got it. Okay. Well, with in relation to the euro, since you know, I think one of the strongest correlations between the euro, or you can say the dollar index, would be gold. How are you viewing precious metals right now?
I mean, gold is, what I'm thinking is gold is obviously coming down if dollar is breaking higher. So I still do not see any top in place for gold. What I'm thinking about it is that while the euro dollar is coming down and while dollar is breaking higher, that gold will actually stay in consolidation. So what I'm looking at here is a triangle. Okay, we are now approaching the lower side of this range at 1395. There is some support, but of course we can see even a drop towards 1385 to test these lower levels of this triangle. So in my opinion, I would not be surprised if this gold will stay just sideways, but definitely not bullish while the dollar is breaking higher. So I don't think I think it's too early to look for any shorts on gold because the pattern itself, it doesn't look to me bearish yet. Okay, but it's too soon to buy it because dollar is breaking to the upside. So I'm just waiting on this pattern to unfold. After all, if it's going to be a triangle, you still don't want to buy it because you need waves D and E to complete this consolidation.
That makes sense. Okay.
So this could be just a higher degree cycle, similar to something that we have seen here. Okay, you can see waves A, B, C, D, E, then break to the upside. Now A, B, maybe we are now in C, D, E, and then another break to the upside. And maybe this will happen once the euro dollar will complete this 5-wave cycle to the downside, as I talked about, and of course dollar index to the upside at the same time.
Awesome. Okay, well that makes sense. And you know, you should have told me that before I went out and bought it this morning. Thanks. Just kidding, joking. No, I'm glad to hear what you have to say. So, and Dale, feel free to jump in if you have any questions. But what, since we only have a few minutes before Dale does his interview, and I think he's got a crypto trader coming in. What else are you seeing?
Maybe, I mean, if dollar index is breaking higher, then you should ask yourself, what would you want to trade? Well, you look at the price action through the majors, and you will see probably the weakest currency out there for the last week or two is pound, right? So yeah. I mean, you would probably want to be shorting cable. And
yes, now this is going to be interesting because cable obviously has been beat up so much, and I think everybody wants to know, can it go further? So go ahead.
Yes, but again, probably you would wait on a pullback. So I'm looking at a wave 5 here. Okay, breaking down from this completion of a wave 4. So again, we need 5 waves lower. Similar price action as the euro dollar. Okay, euro didn't agree with pound because the pound broke down already last week. But now when euro, dollar, and cable are matching perfectly with the structure, that's when I'm even more confident that we are probably going even lower on pound as well here. So I'm thinking about an extended wave 3 now that could be coming or looking for some temporary support here. Watch for a wave 4 bounce and then another sell-off next week. Maybe we will get this wave 4 or some choppy price action after non-farm payrolls report, because in this event I have seen plenty of time markets trading on both sides. So I would not be surprised if this wave 4 will just starting to develop tomorrow.
Well, you know, I guess non-farm payroll might have something to do with that, you know, as a whole. And I think between watching the euro and watching the cable, maybe we will get eventually in a bounce here. So
after all, maybe those events such as yesterday have been more important for traders. That's why we have seen some very interesting volatility, and maybe non-farm payrolls report will not provide the same volatility as we have seen. So maybe it can be both sides traded as a set, and maybe even slower price action.
Yeah, that makes that's
the last 24 hours.
Sure. Anything else that really has been standing out to you?
Yes.
Okay.
Maybe crude oil. I mean, if crude oil, if dollar is headed to the upside, dollar strong, crude oil could come a little bit lower. So I'm looking here at this price action on the 4-hour chart. Very sharp decline here from July high, and only recovery in 3 waves. Notice that this recovery went into 61.8%. And in fact, this 61.8% came in right at this resistance of the former wave 4. And we are falling down now, which looks like a small first impulse in progress. Okay, so maybe if we get further declines today, let's say towards 57, then this would be seen as a very nice reversal from the high, and I think that more weakness will be seen. Now, to make sure that we are on the right track, look at heating oil. Same thing, clear 5 waves down, 3 waves pullback. Looks like that we are headed lower. Even Brent, same scenario, same price action. Okay.
Yeah.
5 waves down, 3 waves up, expecting a breakdown.
Wow. And I mean that's a pretty strong correlation too. When the dollar strengthens, usually it's you have some weaker commodity prices.
I'm here, Blake.
Okay. All right. Sounds good. And hey guys, I want to say real quick, Grega, thank you so much for being here. I'm going to step out and Dale may have a couple questions for you before he brings his interview in, but I just want to let everybody know, remember guys, Grega is a huge part of the ForexAnalytix team. And so if you love what he does, you can get his daily updates in ForexAnalytix, on our platform. And that's part of it if you're a subscriber with ForexAnalytix. So thanks, Grega. And I'm going to let you guys, I'm going to let you guys go. And thank you so much for being here.
Thank you. My pleasure.
Good luck today, Blake. Hey, Greg.
Thanks, you too, guys.
Greg, hey, you have time for maybe a look at one of the precious metals before you go? I know you're counting gold. I don't know if you updated it, but you were looking for this pullback into, I think, what, 1385 or so?
Yes, we talked about gold with Blake earlier, and as I said that the only concern about the bullish gold is, as I said, this current breakout on dollar index. So I don't want to look for gold, any long ideas until I see a top in place on dollar index. Maybe I'll just real quick look at dollar index. So as we said on the euro dollar, we're looking for a 5-wave drop. Here I'm looking for a 5-wave rise. Okay.
Where's that come in ballpark? 99, 40, 50?
Or 100. It's a very strong psychological level. So clearly there is room for more upside. And even here, I have very aggressive bullish count on the right, also expecting 5 waves to the upside. So as long as that's the case, until I don't see a completion of this 5-wave movement, I don't want to look at any longs on gold.
Okay.
Yes.
Got it.
In fact, gold could come much, much lower, maybe 1380, or it will stay sideways.
Okay. Any quick view on US dollar yen? Since they're negatively correlated?
Yes, actually, that's dollar yen is pretty interesting. I have something here. Okay, so that's the Nikkei futures. Okay, right. You have a 3 waves pullback, which is correction in July. Then you had a very strong recovery, and it looks like that was a nice 3-wave setback again. What I like about this setback that it found the support at this swing here, and it already bounced. So I would not be surprised if we see more upside from here. I see a lot of indexes at very nice, very interesting support, like the S&P 500 and DAX, all are trading at very interesting levels. Right. And notice here on the right that dollar yen is looking quite strong. Okay, it has a very tight correlation. So if Nikkei were really starting to move even higher, I think that there can be much further gains for dollar yen on the upside.
Okay, buddy. Did you show S&P with Blake?
No.
Okay, then we'll wrap it there.
Yeah, I mean, the S&P 500, what you should consider is that we are still in uptrend and we don't have any signs, evidences of a top. So we'll be just looking at each pullback as a corrective counter-trend movement within uptrend, because that's what always happened. Market always continued to the upside. So why would now be different? I'm looking at a wave 4 pullback here. Again, I have two different interpretations. Okay, we are in a sharp wave 4 pullback, or has seen a flat here from July 15. But in both cases, there are interesting supports. The first support has already been tested here, 29.70 down to 29.60. But maybe even more important would be this at 29.40. Yes,
yeah, exactly. You love gap fills.
Exactly. And if I consider this wave count on the right, okay, let's say that we are in a wave C, you should be able to count 5 waves to the downside within wave C before you will say that top is in place. Okay, so ideally that's a wave 1, 2, 3, 4, expecting wave 5, and then a rise. And ideally, this would come in play right at this gap.
Okay, great.
So that would be, but I would not be playing longs at this gap. Okay, I would wait on market to react from the levels that I identified, because only then, exactly, because only then I will make sure that I'm on the right track, with my bias or whatever.
Okay, well, my bias is for you to take shorter vacations next summer, because we all miss you when we can't pick your brain. All right.
I am always charting on vacation as well.
I know, buddy. I'm just pulling your leg. So, everyone, thank Grega. You're the wizard. He is a wizard of waves. He's an integral, a very important part of this team, and my intelligence gathering should be for yours too. So, thank you, buddy.
Thank you, man.
All right.
Have a good day. Bye.
You too, man. See you soon. And now it's time for Trader Main. So last time Trader Main was on, he made some great calls in gold, and he does trade a lot of crypto. And since that time, crypto has staged a great rally from 3,000 to 12, 13. So thank you for coming back, Main.
Hey, how's it going, guys?
Good. So, if you want to share your screen, you just hover your mouse. So it's a green box that says share, and then you select the screen you want to show us. Beautiful.
All right.
Okay.
Everyone can see, everyone can hear.
Yeah, you're good, man. So, okay. So you want to start with Bitcoin, and what an interesting time. I was constructive down there in February. Actually bought GBTC. Certainly did not ride the whole move. It's a trust in Bitcoin. Do you know that?
Yeah, of course.
Okay, so I don't know what to do. I thought we might be heading into a correction. Then we had that big up day, and now it's really in the news. The IRS sending out, that they know 10,000 people. I don't know where they got the names, but a lot of people feel that maybe this is the beginning of the governmental war against crypto. So interested in where your head's at, both technically and fundamentally in crypto now.
Yeah. So I mean, when I was here last, funnily enough, I believe it was the end of January.
Yeah.
And the two kind of things that I spotted, were gold being in a mega uptrend, and
correct.
I was very successful in that call, and then in crypto, the one thing I noticed.
And you were a bearish euro. You were bullish gold, but bearish euro, right on both counts.
Exactly.
Very good.
It's funny, everyone was very, very bearish on crypto around here for obvious reasons. But the one thing I'd kind of
they were starting to trade FX because they thought crypto wasn't going to come back. I go, well, that's a sign.
Exactly. And the one thing I saw is like, listen, we're making a higher low on the weekly. And that's kind of what I noticed, funnily enough, with crypto.
78.6 back, bro.
Yeah, exactly. One of the things you'll see on Twitter, and it's very easy to chart crypto very well. I had these levels marked. I was like, you know what? I like this as an area. Did I buy it myself? Unfortunately not. But, charting and trading are two very different things, as many traders will learn. Once you get the TA part of it down, they think that that's the holy grail, when to me, execution, holding the trades, managing the trades once you're in them. That's the hard part of this business, not so much the pretty charts. But the thing I love the most about crypto is it trends like no other market. Once this thing got going, I mean, if you look at the chart, it's almost comical, right? How much it's gone up in such a short period of time. And that kind of goes both ways in that, since February, March, April, we're up, 300-400%.
Right.
And here we are, we've declined 40%. People think the world is falling, yet we're still at $10,000 for one Bitcoin. So, it's like no other market. I mean, I definitely suggest to anyone who trades, any sort of market, any sort of technical trader, take a look at this thing. It moves like nothing else. And when it gets going, I like to I focus just on the high time frame chart, and that's kind of what I've marked here. Once it got above about 4,500 here, I just went to the daily and I just bought any sort of pullback to daily support. And you basically had a chance on almost every single pullback to get in at a daily support level. You can see again here, you have daily support here. We've tested that once. That's what we've tested again here. That's given
twice.
us.
So recently we've tested daily support twice. So would that be get out of the way if we started trading back under that? What is
Exactly.
it, 90.85?
So basically, you're spot on here. I have these two little lines marked here from this candle. To me, as long as we hold here, I think we could see another push towards 11. There's a lot of confluence of kind of resistance, if you want to call it, in this area here. You have this level here. This is also actually confluent with the monthly open for July. And then you have, your psychological resistance at 11K just above there. So to me, there's a range here that could be played. As long as we're holding above this kind of 9,750 to 9,850 area, I can see a measured move coming to here. You have very defined risk, which is basically below here. I think if we're below 97 or 98.50 to 97.50 on a daily basis, we get a close below there, I'd be hesitant. If you're in any sort of leveraged long, I would be looking to probably get out. I don't want to see another bounce at this support, because if we round off here or here, that's just another lower high, a third test of support. There's a good chance this thing rolls over. If you look at the weekly, I would like to see this kind of weekly level here get touched if we are going to continue to the upside. I think that would be good. I'll take my levels off here. If you just look at this, we're due for some sort of correction. So, anyone who is surprised that we're pulling back here after, this kind of a run, sometimes the best thing you could do is delete your levels, zoom out, and, even go to the monthly looks even sillier. So it's,
okay.
It's not surprising to me that we're seeing a pullback here. How far we go is kind of, the question, obviously. My low end on this pullback, if we are to fail this daily support, let's say, is between 75 and 8,500 with some sort of wick below. I wouldn't be too surprised. Some sort of.
Let me ask you this, since we're turning a page on the calendar and it's August.
Sure.
I had a guest on who talked about August in Asia being considered ghost month.
Sure.
Was it DJ Thistle?
Was it DJ Thistle?
Yeah, DJ brought it up. He's excellent. And he said that could be the time where we get that correction, because Asians are a very big part of the crypto market, and they don't do a lot of investing in August. So what do you think of ghost month?
It's funny. I talk to DJ Thistle a lot. We're actually from the same hometown, funnily enough, in Canada. But one thing I completely agree with is a lot of people think, astrology, this ghost month stuff is, BS. Voodoo. But at the end of the day, the Asian market is a huge player in this space. And so whether you believe in it or not, that's volume that's going to be missing from the market. So I do think it's a factor. He is one of the best at analyzing these charts based on, on his astrology readings, on time of the month. There's another festival called the Lantern Festival that happened right when this started happening, which is like a very prosperous time, in that community. So
I thought it was April Fool's when it broke out.
Yeah, that too, I guess, right? Everyone thought it was a joke.
Yeah, the shorts were the fools.
Yeah, exactly. And I mean, I don't think you should discount it. I think information is everything, in a market like this. So, any sort of piece you can have that you can add to your arsenal. I agree. Another thing to consider when you're looking at Bitcoin, and this has been floating around on Twitter a lot lately, is that it's been following this gold fractal from the gold bull run. And if you look at this bull run that gold had and this kind of bottoming pattern had, it looks very similar to what Bitcoin is going through now. And I could do a little side by side here, and it will look. It's quite. And DJ Thistle is the one who put me onto this, so I consider myself kind of more of a purely technical trader. But when he put me onto, this fractal, if you want to call it that, I found it very interesting, and he's been following it for some time. And, it doesn't take a rocket.
What year is that gold?
So this is the bottom of gold in 2000.
Okay, I see it.
I mean, it doesn't take a rocket scientist to see these market cycles look kind of similar. And when gold,
I remember back then in 2000, people were saying, Dale, why are you looking at gold? It's an archaic relic. It's only good for a paperweight. It doesn't work anymore.
Well, isn't it funny how not just the technicals lined up with, basically you had a falling wedge here into support, and that's exactly how Bitcoin bottomed, right? We had a falling wedge into support, but the sentiment of the market was very similar. You had extreme bearishness on gold. You had people thinking it was done. Then you also had the gold bugs who were like, gold is the future. And you kind of had the same thing about Bitcoin here. It was very harsh bearish sentiment, but there was, a few people who were like, I don't know, I think this might be it. And then gold trended like crazy. And so so my kind of analysis that I've gone over with DJ is we're thinking, if we're still following this fractal, I mean, even looking at these two charts side by side, if I were
30,000 Bitcoin.
Exactly that, right? So this topping pattern here, looks an awful lot like either this pattern here or this pattern here. So that's the question. If we're
back to 7,000 up to 30s, if you miss the first quadruple, you got a shot for the next one.
So exactly. I mean, my dream scenario on Bitcoin.
See how sick we are? We dream about the markets. Do you have dreams at night, trading dreams?
It's very weird. I see charts in my dreams, and then sometimes I wake up and I can't tell if it happened in real life or not. I don't know if that's a good thing or a bad thing.
I have after we were through the interview, I have a psychiatrist you could talk to.
Okay, perfect.
Yeah, the number. Go ahead.
Send them my way. So my kind of ideal scenario, some sort of move down here, another move up, maybe a move down again to take out this low. I wouldn't be surprised if we came to maybe 8,000. That's going to get people scared. A bounce up to get people bullish again, and then a wipe of that low before continuing
into the equinox.
Exactly.
September.
I think we'll double top at 13K. And then I think once we get to past 13K, I don't see any real resistance till about 17,000, which is
the old highs.
The old highs. And I think once you get through here, that's kind of your party line. Once we're through this area, then it becomes, how high does this thing go, right? And that's the funnest part about Bitcoin. It becomes pure speculation. And, my advice for anyone who is in this market, if you wanted to learn anything from this bull market, no one knew it was going to go to 20K. At some point, this becomes pure speculation, right? Have predetermined levels in your head where you're going to start scaling out of your position. Because if you don't, it's very easy to get greedy when you're up at 2x. You go, well, maybe it will go up 3x, maybe it will go up 4x, and you never know. And as you can see, when this thing peaks, it declines very quickly after. You could have had $20,000 Bitcoin, and less than a month later, it's at 6,000. So, you got to have levels in mind. So that'd be my kind of suggestion.
Not a profit till you take it.
Exactly. No one ever went broke taking profits, right? So
Bernard Baruch.
So to me, at 20,000, I personally am going to be doing it in increments. Every $5,000, I'm going to be taking it off, and I'm going to be happy, because if you were diligent on the way up, you should have some pretty solid core position from, hopefully the last few months before it's been rocketing. Funnily enough, I told a lot of my friends and family to buy around here, and no one did except for my mother and through me, because I think the barrier to entry to get in is still a little high for some people. I told a lot of my friends who had no exposure at all, I said, try and get some exposure, and they didn't start messaging me until here. Funnily enough, it's at 12K, and they're going, should I buy now? And now that it's down to 10K, they're asking me if it's dead. So it's funny how the market works, and not only are kind of the charts cyclical, but also the sentiment you get from, the people.
Oh yeah, the markets are bipolar, buddy.
Yeah.
So let me ask you this: are there any markets outside of Bitcoin and other cryptos that have your interest with what's going on with the Fed yesterday? You doing anything else? Because prior you were, trading gold and wondered if you were negative euro, and that's been playing out. So wondering what you're thinking outside the box of crypto.
So gold was a very nice run. I'm no longer in a position on gold, but I believe Gregor was his name, right? The last guest here. I kind of agree with him. Now that I think gold is forming some sort of a range here after trending pretty well. You had a nice falling wedge here into support, led to this last leg up. I don't think many people thought gold was going to go this high. But if you zoom out to the monthly chart here, to me,
we're at halfway back here.
Is the break of what we're doing is we're breaking through this monthly resistance. So imagine this area is shaded, right? We had 1, 2, 3 tests, 4 tests, and we're finally breaking through. So when we close above this thing, I have no doubt in my mind that within the next 3 years, we could see a new all-time high on gold, maybe even less.
What would turn you bearish gold?
Pardon me?
What would turn you bearish gold?
I think getting back below, the 1300, I just don't see it happening, but getting back below, if we zoom in a bit for a little more detail here, filling in some of this wouldn't be out of the question. Obviously, this is, a huge extension here, but I wouldn't want to see us get back below this swing low.
Well, okay.
Which is
who
huge.
would that's long. So
yeah, I mean,
any would you say it was such an important breakout at 1380 that that if we negate it, it might be a problem?
Exactly. I mean, I don't want to see us get back below this kind of monthly. I would call it a block or a pivot. Now that we've broken here, this 1330 level, right? This to me, 1332 here, very clear level. Once we broke there, I don't want to see us getting back too close to there. I play gold on a very high time frame. So my crypto fiends who are like all-time high in 2 years, they're going to I'm going to be ancient by then. That's so far away. It's like, these plays take longer to play out.
Goes faster than they think.
Yeah, but it will creep up on you, right? People thought they were going to have forever to buy gold sub $1,200, and look where we are now. So I actually quite agree with Gregor here. I would not be surprised to see some sort of dip, maybe below these lows here, right around 1380 is, I think, basically the same level he had. And then the test is going to be here back at about 1410. So to me, I think, confluent with his analysis on the dollar, some sort of dip towards 1380, and then this is the test, 1410. If we reject off there, I think we'll see a deeper pullback. This is the area I'd be watching. If we can regain 1410 after sweeping this range low, I would call it, then I would expect another, continuation to the upside. But I wouldn't be surprised if we see some oscillation between kind of 1440 and 1380, which gives you a very nice range to play. If you're an intraday trader, go on your chart, mark out this range, and you're going to have some very nice levels where you can key off some kind of intraday, interweek trades, in the meantime. In terms of currencies right now, I live in Canada, so I'm always concerned about my dollar CAD, and this is not good for my dollar CAD. Pull up my. So to me, I'm thinking the Canadian dollar is topped here. I think what we have here is, you obviously have an uptrend going here, and I think this breakdown. I'm going to pull up the weekly. I think it looks best.
because the BOC is one of the only central banks that hasn't talked or moved on easing. Do you know the reason for that?
I don't.
Why they're so stubborn about this?
I mean, I guess it's definitely worrisome, and so I run a business here in Canada that works with a lot of U.S. clients. So I always have a keen eye on what this currency is doing, because I want to, not only do I trade it, but I want to trade my money at opportune times. And we've been getting crushed. But as much as I think that the dollar is looking bullish, I do think that this pair has topped. To me, I consider this a break in market structure here on the chart, and I think this is a lower high. So to me, what I would like to see happen on the dollar CAD here, here's a lower low, right? So you have a low, lower high relative to this one. Now we have a lower low. So what I'm looking to do is I'm looking to sell a retrace. I think we're going to see, confluent with a breakout on the dollar, which we're seeing, I think we'll see one more move up here. And just like Greg, I really like the 62% retracement. 60 to 79 is an area I like to see price retrace to for sells or buys.
So compared to the dollar, actually, now that I'm talking to you about it and looking at it, USD CAD, why isn't USD CAD at new highs with the Dixie? So it's actually showing some relative strength that it's not already at 136 with the Dixie being at new highs. Do you know what I'm saying here?
Yeah, with the correlation.
Yeah.
So I think it's interesting, but I think what we might see, and I think what a lot of people might get burned on, as I thought that the dollar was going to be at 100 a while ago.
Yeah, we're almost there.
So this slow grind, I don't think is necessarily as bullish as some people may think.
Yeah.
Because when I like to see a trending market, I like to see it make higher highs and higher lows with some sort of velocity. When it's grinding and it's making marginally higher highs,
feels like distribution.
Lows, to me, it looks like distribution. It looks like the demand is drying up, and we're coming into weekly resistance here. There's a lot of conflict. I mean, if you even just take this back to here, right? This is not an area that we're going to come through on first time. So my kind of for the dollar CAD is that we see a pullback from here. And I think we're going to see, this is kind of my next trade I'm looking for on dollar CAD, is some sort of move towards 1.33 and then a downtrend. We have a lot of nice ripe higher lows here, the staircase up, elevator down kind of thing. So I wouldn't
down is faster.
Surprised to see a repeat of this kind of price action here. You have that slow grind up, a top, and then it gets wiped. I mean, I would love to see one of these on the dollar CAD just for my sake. But that's kind of my view on dollar CAD.
How about stock indexes? Do you ever dabble?
Sure. So, I mean, I unsuccessfully tried to short the top of the S&P, I think 3 different times. So didn't go so well. Yeah. I mean, this
is only 3.
Yeah, exactly. This is a perfect lesson in not fighting the trend, guys. Right. So, it's all fun. It's very fun to want to be the hero. Who's like, I nailed the top of the stock market. But
prudence over valor.
Yeah, exactly. Couldn't have said it better myself.
So how about now, that candle we're looking at now? What do you think?
So, I mean, I'm thinking we're still in an uptrend, but I do believe that we are slowing down. So I would like to see some sort of pullback back into kind of these highs here.
Mm-hmm.
And I would look for bullishness there. I mean, basically, to me, the stock market, I don't want to see get back below, this level here, kind of the 28.75, 28.33. Like, I think this has to be rock solid or we can see a very steep decline. So I ended up shorting here. Didn't close here because I thought the world was going to end. And then, within a matter of a few weeks, it was back at my entry. So, I don't want to fight the trend on this thing, but I do think we are going to, and you can almost see we've almost spiked into it already. I wouldn't be surprised if we see some sort of pullback into the low 2900s before continuation. I mean, this made a marginally higher high here, but this is not something I trade on a daily basis. I think part of it was an ego thing. I saw a lot of news swirling around about how the market was topped, and I was like, I want to be the guy who called it, and it didn't go so well.
Yeah. Well, next time you have the urge to make a call, use your cell.
Yeah, exactly.
Listen, I'm so glad you came back, Maine, and some crystal clear looks that you provided today. Now would be a good time if you want to cover euro. Okay, go ahead.
We go over euro. All I'm saying is it's going to parity, and that will be the call of my career.
Okay. All right, a lot of people calling for that. Maybe an intermittent rally first, but
yeah, I think we'll have some sort of. I mean, the monthly looks rather grim, but I think we're gonna have, and I think this is, me. I should look into Greg's analysis more, because it looks like we have a lot of the same looks.
He's great, man.
Yeah, it's so fun, and that's what I love about trading is, he's doing a lot of Elliott waves.
Yeah.
Something I've never had experience with ever, but I love seeing people with different ways of analyzing the charts coming to, the same kind of end conclusion is very cool.
Well, FACE is like the law of attraction, right? So,
yeah,
you attract good traders to hang out here with our team and give people confluence of opinions to give them more conviction.
Yeah, I absolutely love the law of attraction. I believe that stuff works, every day there. So very cool to see.
Well, I'm sure that, we had a nice crowd. You are on being streamed on investing.com as well today. So what would be the best way for people to stay in touch with you? And if you want to show your website and the services you offer, this would be a good time for it.
Yeah. So if you want to stay in touch with me, my most